Welcome to the HR Empowerment Podcast, where we will uncover strategies and new insights from HR professionals who discuss up-to-date regulations, best practices, and the most pressing topics like diversity and equity, leadership, dealing with difficult situations, and much more that affect your bottom line and business. Thanks for joining us.
Hey, everybody, welcome back. It's Wendy Sellers here, the HR lady. Today, we're going to be talking about not, I would say, fun things, but definitely necessary things that can help you be an employer of choice with offering benefits. And specifically, we're going to be talking about supplemental employment benefit plans and a bunch of other things with our expert guest, Elizabeth Lutes. Hey, Elizabeth, how you doing?
Hi, Wendy. I'm doing well, and thanks so much for having me.
Yeah, absolutely. So I understand that you're the executive vice president for RVI, People Planning and Communication, and also leadership of transition services. What the heck does that mean? Tell our listeners about yourself and maybe, how you got to where you are and what your day looks like every day.
Thank you. Happy to do that. Like many of us, I did not plan to end up where I am.
Same.
Exactly. The twists and turns in a career are always very interesting. But I was a consultant in organization change, leadership development for many years. And then one of my clients, the RBI group, actually hired me to be responsible for human resources and strategic planning, communication. And then a couple of years after I started that, my boss, the CEO, asked me if I would take on this little business called Transition Services. So thus, for the last 20 years, amazingly, that is what I have been doing.
And so transition services are for people in between jobs?
Transition Services is a third-party administrator of a little-known benefit called Supplemental Unemployment Benefit Plans, subplans for short, subplans. And it's remarkable, in the 20 plus years that I have been running this business, along with doing HR for the parent company, RVI, I have run into less than 10 people who are actually familiar with supplemental unemployment benefit plans. I mean, and they've been around since the 50s. So they've been around for a long, long time. And they're very useful. They're just a very useful plan for a company to have in place in case they need it.
I'm the HR lady, and I used to have my 215 license out here in Florida and actually sell insurance and benefits. And I'm not super familiar with supplemental unemployment benefit plans. I know a little bit, enough to be dangerous when I got your email going, oh my goodness, I need to know more. So please, let's jump in and just kind of educate us, what are they and how can a company get them and why would they want them?
Exactly. Perfect questions. I'm just going to say subplan, and
Okay.
everybody can fill in the supplemental unemployment benefit plan. They've been around since the 50s. They originated in the union environment, and it was a structure put in place and approved by the IRS as a way for companies to top up employees' income when they had been laid off or furloughed, to make their I can't believe I'm stumbling over this so badly. My apologies. So basically, what the companies wanted is for people to file for state unemployment, and the companies wanted to top them up so that what they took home was the same as what they were making when they were working.
Oh, nice.
Yeah. So in the union environment where there would be plant shutdowns or there'd be weather-related shutdowns, people would go out for 2 weeks or for a month. This was a structure that was very cost efficient. The employees were made whole, right? They still got the same money every week. It was just coming from, one, the state unemployment, and two, the company.
Okay.
Very efficient for the employers because they were paying the difference between the weekly wage and the state unemployment. So to give you a really simple example, if somebody's making 1,000 a week, they take 400 from the state unemployment, 600 from the company. Therefore, the company's paying 600 instead of 1,000. The employee is still taking home 1,000, right?
Right. And then the employee comes back because you treated them well.
Exactly. So That was the original scenario. And the IRS said, if you do this, then this will be considered a benefit as opposed to a wage. So the payments that the company makes are FICA non-taxable, both for the
Nice.
employer and for the employee.
Whoa, that's huge.
It is huge. It
That's
is.
huge.
So it originated in the union environment. It was easy to track in the union environment. But then about, 25 years or so ago, someone said, hey, this could be done in any environment.
Right.
And it could be done in the case of permanent separations, not just furloughs.
Right.
And thus our company was born, administering supplemental unemployment benefit plans. So now so traditional severance, right? If you think about that, typically what happens is the company says they have to do a layoff. They identify who it is that's going to be laid
Right.
off. They determine the severance either because they have a severance policy or they decide what they want to do for that particular reduction in force. And then they pay a lump sum severance. Some
Right.
companies will pay salary continuation, but mostly it's a lump sum severance.
Yes. Yes.
And they get a release and waiver in exchange for that.
Right.
So that is simple to administer, but pricey, right?
Yeah, absolutely. Especially in one giant chunk.
Yes, exactly. So with a supplemental unemployment plan with a third-party administrator, same process. The individuals are identified who are going to be laid off. But then instead of being paid severance, they actually are eligible for supplemental unemployment benefits. And what they need to do is file for state UI, and then they're paid the difference between their prior weekly wage and the state unemployment that they're entitled to receive. And in the most efficient version of the plan, they only receive those payments while they're unemployed.
Okay. So, and then is this an insurance that a company buys?
It's not an insurance.
Not a traditional insurance plan.
No, it's a benefit.
Okay.
It is a benefit. And it's a benefit that operates in conjunction with the state unemployment insurance.
Yeah, and it sounds like, it's created, even though it was created for union environments, for where, hey, we don't have work right now, but we're going to have work. So we need you to
Exactly.
kind of go away right now, employee. Here, we're going to make you whole, but then we're going to make you come back. I don't know if this would really benefit companies that are just doing layoffs and not going to replace those people, correct?
And there's actually a huge benefit in terms of cost savings. So
Instead of the lump sum severances.
instead of the
Yeah,
lump sum
yeah,
severance,
yeah,
exactly.
yeah,
Um,
absolutely.
and a lot of HR people don't like the idea of saving money on severance, right? I mean, I have to be blunt about it.
Yep.
It's really true that, none of us like laying people off. None of
Right.
us like having to say to people, sorry, I no longer have a job for you. And severance is a way that companies sweeten the pot for employees who are being laid off.
Yeah, absolutely. And
So
and
the
for
que-
and for this, sorry to interrupt you, but for this one, because you mentioned before that the employee has to file for unemployment in the state that they're in. And then, of course, if you have employees in different states, there's going to be different rates and different amounts that states pay and things like that. So you got to keep that in mind if you're going that direction as well.
and that's one of the big reasons why to have a third-party administrator. Because in addition to there being IRS guidelines for a subplan to work, there are also state rules that the plan needs to operate in compliance with. So part of what we do is we make sure that the plan is compliant in every state in which the employer operates. What
Gotcha.
happens, right now for an employee in the state of Illinois, for example, they can collect state unemployment while they're receiving severance. So that individual who
Ah.
is laid off in Illinois actually does a lot better than an employee in Georgia who cannot even start collecting state unemployment until the whole severance period has expired, regardless of whether it was paid in a lump sum or not.
Oh, wow. Yeah, I didn't even think about it that way. Thank you so much. And you also mentioned, HR leaders, but also finance leaders are, they obviously don't understand the SUB plan, and they think that it's going to just increase the payroll or move money from payroll taxes to higher state unemployment tax rates, but they have to be enrolled in the unemployment tax or unemployment benefits anyways, right, to get this plan.
Exactly. And that is you put your finger on it. That is one of the big misconceptions. State unemployment taxes, there's a slight chance that they'll increase for a company when they use a subplan, but it's really, really small. And that potential increase in state unemployment tax for the employer is a fraction of the savings that would be achieved by having a subplan in place.
Yeah, exactly. Especially if you plan on bringing these workers back because your products or services are cyclical by nature or whatever it might be. I actually found that a 2021 Mercer study found that employers using SUB plans did not experience statistically significant increases in their state unemployment insurance. And that was over a 2 to 3 year period. So you're
Yeah.
right. It's 100% a misconception about these, SUB plans. Could you walk us through maybe a real world case scenario, where an SUB plan saved, I don't know, 30, 50%? What were the hidden return on investment drivers? You've already mentioned one being the unemployment tax pretty much doesn't get affected.
Yeah, happy to do that. So, we have our business has clients that are very small, like, 2,000 employees, and we have clients that are very large, hundreds of thousands of employees. So there's talking about the dollar amount, and then there is also talking about the percent of savings, right? So we've had a company that laid off 5,100 employees and over the years. And if they had just paid severance to those 5,100 employees, they would have paid just about 40 million in traditional severance.
Okay.
Instead, with the subplan, they paid 21.5.
Whoa, that's huge.
It's huge. It's huge. They saved this company with those 5,100 employees, saved almost $18 million or 48%. And important to keep in mind that employees were still receiving the same weekly take home while they were unemployed. So they still had a solid bridge to their next employment opportunity.
Right, which I saw some statistics on that too, that 25% of employees who are on an SUB plan found new jobs before it ended. And that's how these companies save money, because the employee is, able to continue their life while looking for another job. Where I find, and I know this from experience being the HR lady, that the longer somebody's on unemployment, even if it's a fraction of what they got before, their kind of motivation goes down and they get used to okay, not working. I think majority of people still want a job, right? But if you could milk the system a little bit longer, let's do that. Now you can get paid while doing it and then go ahead and find a new job. And that's pretty much where most of the savings come from, right?
Exactly.
As well as FICA and all that stuff that you mentioned too. So that's huge. That was what, over 21 million you said they saved?
Yes, it's a huge amount. 48%. And if you think about it for a smaller company, right, even just saving 48%, even if that means, $250,000, that can be a big impact to the bottom line.
Yeah. I think this is really important for this conversation, unfortunately, that we're having right now, because there are companies that are laying off, because of what's going on in the economy, whether it's temporary layoffs or long-term layoffs, we don't know yet. And they could be saving money. How quickly can a company go from listening to our podcast to say, yes, I want to start doing supplemental and unemployment benefits? And do they have to register that or anything with the state?
Yeah. Can I go back to the one last point before I answer this
Sure,
question?
absolutely.
So the other thing that you can do through a subplan is companies can offer a reemployment bonus. So, some employees, as you referred to, some employees or some individuals take a longer time to find new work. Some people find it right away. And what an employer can do to say, hey, if you get a job before the expiration of your benefit period, you're going to get a lump sum reemployment bonus, which will incent that individual to return to work sooner. Nice for them to get some reward for that. And it allows the company to share some of the savings with that individual while still keeping a lot of the savings. So it's a really efficient structure that supports people in returning to work and rewards them for doing that.
Yeah, so they don't milk the system too long. And I hate to use that terminology, they didn't do anything wrong to get laid off in most cases. But if you're giving them part of your savings, even though they already got a job, I mean, geez, that's a win-win. That would motivate me to get a full-time paycheck and then get this bonus. That's extra money in my pocket while now I'm whole again and continue moving forward.
Exactly.
I absolutely love that. Um,
So then to go to your next question about how to implement. In
yes.
most states in the US, it's really simple. You just need to draft the plan, which we help with, and there are a lot of ways to design the plan to, identify who's going to be eligible and the terms of the plan. So you design the plan and you're ready to go in most states. There are a number of states that require approval. For most of those, what we do is once the plan is drafted is we file the plan for approval. It takes a couple of weeks, we receive approval, and then it's ready to go. There are a couple of states that have held on to some of the legacy requirements from back in the 50s of the IRS, which means it's a little more time consuming to get approval in those states. But we are successful in doing that. So
Yeah, you're like, that's what I do. I'm an expert. I'll help you. Let me help you.
yes, we would love to help.
So how do you know, the SUB plans, and it is a mouthful, supplemental unemployment benefit plans, they
Yes.
hinge on weekly benefit contingent payments, obviously, except for if you're doing those bonuses that you mentioned. How do employers keep ex-employees engaged with filing requirements and still protect themselves from overpayments or straight out fraud, since it's not an official like insurance type plan?
Yeah. Well, as you probably know, most states, it's easy to file for state unemployment, right? You can do it online. Takes a couple of minutes, and then you validate every week that you're still unemployed and looking for work. What we do as a third-party administrator is we also require that people validate with us
Okay.
that they're unemployed and that they've filed for state UI. And they can do that online any time of day. They can call into an automated phone system. They can talk to somebody if they want. Takes literally less than 2 minutes to do that. And that makes people eligible to receive their payments. They receive their payments from the employer on the same, EIN number. So it's all on their W-2 at the end of the year. So
Okay.
it's very simple. It takes, a generous estimate would be 10 minutes for an employee on a weekly basis to validate that they're unemployed and make themselves eligible to receive their benefits.
And so you said it goes on their W-2. Obviously, everything goes on your W-2. But if it's not treated as compensation from the employer aspect, I know we were talking about like the FICA and the payroll taxes, and I know it's treated as a benefit, but it ends up as payment in my bank account. How do I end up paying taxes on that? Or do I pay taxes on that as a receiver of the money?
You would pay whatever income taxes that it counts as it's income taxable.
Yeah.
Um, uh, it- However, what we do is in during the implementation process is each company sets up an additional pay code. And that
Mm.
pay code is for subpay, which is then categorized as non-FICA taxable. So then on the actual pay stub, people will see, okay, year-to-date wages were X, subpay this week is Y. So it's very clear exactly what kind of pay they're getting for what period.
But that doesn't that put a little bit more risk, or hey, don't forget you're gonna have to pay for this and when you do your taxes for the employee side.
It's literally no different because it's all on their W-2. It's
Okay.
just a different category.
Okay. All right. Well, I'm liking this, that's for sure. I found this statistic from Gallagher. It's a little outdated, 2023, but says that companies using digital claim verification systems for things like SUB report 60% lower rates of overpayment in ineligible claims. So if you do plan on using an SUB plan in the future, obviously go with our friend Elizabeth here, who is clearly the expert, way above anything in it I've ever heard. But make sure that you're not just winging it and trusting employees, because unfortunately, they're now your former employees, and they might have something to grind with you and say, I'm going to pull this, make this go out as long as possible so I can make some money. So be careful with the claim verifications. My one more question I have is just looking forward to, geez, I was going to say 2 to 3 years, but really what's going on now, 2025 and probably 2026 in the United States specifically. So many companies are doing layoffs. We don't know if they're permanent or long term or just temporary, but I haven't experienced this in quite some time, except for like COVID. So are there any regulations that we should be worried about, or even labor market trends that should convince HR leaders to go, you know what, we might want to start talking about the SUB plan blueprint on a shelf right now?
I think if I could pick one word that characterizes our environment today, it's uncertainty.
Yeah, that's a
You
very
know,
good word there.
really hard to tell which direction things are going to go. And one of the advantages of a sub plan is once you have it in place, you use it when you need it. So
Yeah.
it's really a in case of a rainy day kind of structure. There's a little bit of work, I'm not going to lie. There's a little bit of work at getting it in place, especially for multi-state employers. We try and take as much of that burden as possible, but it takes some time. But then, if something comes up, if there's a turn in the market or a change in the economy, a layoff needs to happen or a temporary shutdown needs to happen, then it's in place, ready to go.
Right. It doesn't cost you anything when it's just sitting there, correct?
Exactly.
I mean, it costs you time and, expertise like yourself to set up. But if it's just sitting there just in case, it's not like an insurance plan that you got to pay on every month or every quarter. It's just there ready to go in case you're doing layoffs. So this is definitely highly recommended for any industry who has, what's your word? Uncertainty.
Yes, exactly.
Right now, which I think is a lot of industries, but definitely if you are an industry that is cyclical in nature, right? But maybe holiday sales, summer sales, winter sales. And if you think you're going to need to be hiring and then laying off, rehiring and laying off, why don't we keep rehiring our current employees, right? And that way
Yeah.
we don't have to keep training them. So if we treat them well while they're not our employees, or they're sitting around during a layoff, they're going to automatically come back when you have work again, because they're going to say, you treated me good, I'm going to treat you good.
And, to bring up, we're having these huge weather tragedies,
Mm-hmm.
right? Fires in LA, the floods in Texas. I mean, they're horrific on so many levels. But if you boil down that impact to the number of people who cannot go to work or the companies that have to shut down for a while, this is a structure that can allow companies to continue to support people in times that are really difficult without it breaking the bank.
Yeah, right. Exactly. Yeah, thank you for bringing that up. I didn't even think about that either. Just the weather related issues. It's not no fault of the employee, no fault of the employer. It's Mother Nature at work. And maybe humans are messing with that a little bit. But at the same time, you just, if you don't have a plan and people everybody in the community loses the job, you're going to lose customers, not just employees.
Yeah.
And so super important to understand. Now, I could see many startup companies that are listening to this going, absolutely not, because they're probably winging it. I mean, I was a startup company too, and you wing it for a while, and then you just have a hope and a prayer, and then you're like, you know what, I kind of need a plan, right?
Yes.
And it truly does sound like the supplemental unemployment benefit plans, they're just no longer niche. They're, with labor volatility and just not even just humans as labor, but that we are all fighting for the same knowledge, skills, and abilities wherever we're located, remote or in person. And then we have tax caps rising. This is sounds to me just like, good table stakes for responsible workforce planning.
Yes. Happy to hear you say that. I have thought that for a long time.
Yeah, I love it. No, I'm definitely going to make sure that I brag about this to every client that I work with now because like I said at the beginning of our conversation, I've heard about this a little bit, but I never really fully understood it either. And I think this is something that small businesses need to look at as well because the cost of recruiting and replacing people, whew, so expensive. I know I have a recruiter on my team and it is more expensive than ever just to put a job ad out there, never mind, actually going through the process of interviewing and background checks and, screening and reference checks. And so this people that are listening, if you're nodding your head going, yeah, recruiting's expensive, why don't we try to retain some of the employees that we may have had to lay off, even if temporarily? And even if they don't come back, at least they're going to brag about us, right, Elizabeth?
Yeah, they could brag about us. They can feel really well treated, fairly treated, as they exit. And, another factor is human resources is rarely seen as paying much attention to the bottom line.
Yeah.
And this is a way that allows HR leaders to go, okay, if I save this money over here, what could I do over here that's
Yeah.
really going to support me in retraining, in retaining and training and attracting the workforce that we need as we move into the future.
It really is. And your image as a company, um, these days, customers care as well. So if you're not treating your employees good and that ends up on the internet, which everything does, then it's going to hurt your sales too. Thank you so much. This has been so awesome and amazing and helpful. Before we wrap up, are there any like resources, books, courses, any organizations that you'd recommend for our listeners in diving deeper into the conversation of supplemental and unemployment benefit plans?
Well, we work to put a lot of articles out on SHRM and on LinkedIn. Our website is transitionservices.com. So we have a lot of material, a lot of collateral that people can learn more about this. And of course, we're always happy to talk to anybody who has questions. As we said, in the beginning of our conversation, there's not a lot out there in the general public,
Yeah.
right? So I don't have, I can point to us.
Yeah, hey, you know what? The funny thing is, it's not bragging or anything like that or self-promotion. Even if it is, I don't really care right now because, again, I've been doing this over 30 years. I'm the HR lady. I have benefits licenses and certifications and everything, and I barely know anything about this. So, please, everybody connect with Elizabeth on transitionservices.com. And are you on LinkedIn as well?
We are on LinkedIn as well, yes.
Okay, I'll make sure that your information is in the podcast notes so that people can connect with you and learn more and hopefully start saying, we need to have some better workforce planning and make HR start caring about the bottom line. Hint, we always do. I have to protect my HR people. We always
Yes.
do care about the bottom line. We're just used to using it in a different manner and also usually told no by the CFO. Any
It's a
final
tough
words?
balancing act.
It really is. Any final words before we wrap up?
No, thank you so much for having me on. It's really been a pleasure chatting with you.
Yeah, absolutely. Thank you so much, Elizabeth Lutes. I 100% appreciate this. You've educated me I hope everybody has also been educated by listening to this podcast today. Make sure that if you are listening on the AuroraTrainingAdvantage.com website and you log in, know that you can get HRCI and SHRM credits for listening. Take care, everyone, and thanks for joining us. Take care, Elizabeth.
Thank you so much, Wendy.